Let's do nice accounting work. We're going to do another financial statements question, and I hope it's cold wherever you are at this point of time, because accounting and cold goes together like rain and pancake. Below is a pre-adjustment trial balance of Greef traders as at 29 Feb 2012. Now they give us a pre-adjustment trial balance as at 29 February. Statement of financial position section of the trial balance: capital, drawings, land and buildings, vehicles, equipment, accumulated depreciation, loan at Union Bank 16% per annum, fixed deposit BNS Bank at 12% per annum, inventory, and look here as at the beginning of the year. So hint, periodic system. Debtors control, allowance for credit losses, note that I have an existing balance, bank, petty cash, creditors control, pay as you earn for source, and pension fund payable. The nominal account section: sales, purchases, debtors allowances, and creditors allowances. Now, debtors allowances is sales returns. So you might as well go and close it off against the sales account quite immediately. So you're going to credit that account, and you're going to debit your sales account. So here we're going to take this off, minus 2340. Good. Then our creditors allowances, that is purchases returns. So we're going to reduce our purchases with that amount of 5246, and you're going to take this one out of the books, minus 5246. And then we got rid of that one. Good. Carriage on purchases, salaries. Now, this also, carriages, purchases, that means that definitely, and it's on purchases, so we have a periodic system here. Salaries, packaging materials, stationery for office use, rent income, interest on fixed deposit, interest on loan, insurance, credit losses, repairs, donations received, pension fund contributions, employer, depreciation, telephone, and water and electricity. And there's the totals of our trial balance. It balances. Now they give us the adjustments and the additional information, and let's just quickly check what they want from us. Use the given information above to prepare the statement of profit or loss and other comprehensive income for the year ended 29 February 2012. Ignore that. Very important, ignore that. Okay, and then they tell you to show all your calculations either on the statement next to the applicable element or separate. Good. So we are going to do the statement of profit or loss. And although a lot of these adjustment entries also have an impact on the statement of financial position, I'm not going to do that full adjustment now because they don't require me to do the statement of financial position, nor do they require that I'm going to have to show them any notes to the statement of financial position. So please guys, don't waste your time and now bother with the statement of financial position. Just make sure that we're going to pass the correct entries that has an impact on our income statement. Stock to the value of 750 Rand was returned to suppliers on 29 February 2012. Unfortunately, no entry was made for this transaction. The stock was sent back before the stock count. Why do they tell me that? The stock was sent back before the stock count. Because here in number 4, they tell us that the stock count revealed the following. Inventory on hand, 22,986. So that means that when I actually counted that inventory, this 750 Rand has already been taken into consideration. So I'm not going to adjust my physical stock account figure because that it will be the correct figure. What I want to do, however, is that I have to adjust my purchases and I have to adjust my creditors. Again, if they don't ask the creditors side of the story, so all I'm going to do is I'm going to reduce my purchases with 750 Rand. The second adjustment entry. Stationery to the value of 375 Rand was bought for use in the office. The amount was incorrectly entered into the purchases column of the creditors journal by mistake. Correct the error. So what happened here is purchases was overstated with 375 Rand and stationery was understated with 375 Rand. So there's stationery I am going to increase my stationery account plus 375 Rand. Guys, now once more, hopefully you have written down your template for your statement of profit or loss already. And hopefully what you've done is in the template already put down some of the entries that you could have identified out of your trial balance. Because this is about 98% of all the entries that you need. So once you have written down your template and you have drawn a line there on the right hand side, and on the other side of the line you're going to do your computations, you could have written in the other side on a line by line basis already what the amount was that you have to start off with. So for instance, for sales, you would have written on the calculation side of the line 611760, and you would have already said minus 2340. You are still continuing with your calculations, so you cannot write a final figure in the actual statement. So all these things that I'm writing here, the 5246s and all the 750s, whatever, you would have done in the calculation side of your income statement. We've started with whatever the figure was that I gave you, and now you're going to adjust that figure with whatever the adjustment entry is going to look like. Good. Inventory with a cost price of 280 Rand was donated to the local school as part of their fundraising campaign. No entry was made for this. So against our purchases, we're going to have to adjust that amount of that donation of 280 Rand. And we have donations received there, but we don't have donations made. So donations expense. We have to add here 280 Rand. So that is something that's not in your income statement up till now. And if you have your template under operating expenses, you could have written in donations under the expenses side, 280 Rand. Good. The stock take on 29 February showed the following stock on hand. Now we have already seen that we're working with a periodic system. So in the periodic system, our cost of sales would have been opening inventory, which was 25,410, purchases, which is still an ongoing amount, carriage on purchases, which probably is finalized, I don't know, minus closing inventory, and the closing inventory would have been the 22,986. Also, they told us that stationery on hand was 810 Rand. So what is going to be your accounting entry? You're going to credit your expense account with 810 Rand, and you're going to debit consumable stock, which is a statement of financial position account, 810 Rand. The same thing applies to packaging material, 1392. You're going to credit your packaging material expense account with the amount of 1392, and you're going to debit consumable stock with 1392. Consumable stock, the 810 plus the 1392 will form part of your inventory. So in your inventory note to the statement of financial position, if I did ask you that, those three figures would have appeared. Trading inventory 22,986, consumable inventory, which would have been those two together. Good. Then the bank statement for February 2012 was received after the trial balance had been drawn up, so it can't be in my pre-adjustment trial balance. Interest received on credit balance, 173. Now there's the interest on the fixed deposit, so I must just say here, interest bank, 173. It's interest received. Interest on fixed deposit will also be interest received. So somewhere along the line, I have to account for that. And then obviously the other side of the entry would have been accrued interest, which would have been part of trade and other receivables. I'm not bothered with that portion at this point of time. Unpaid check of 450 Rand. It was received from Al Bryden in settlement of his account of 500 Rand, and it was dishonored owing to insufficient funds. With the issue of the invoice, it was probable that Al Bryden would settle the account in time to make use of the discount. Good. Now, debtors is the only thing that I want to keep updated as I go along. and probably maybe sometimes creditors as well, depending on the type of question, because usually I need my debtors figure in order to do further calculations. So if I'm going to reverse this entry with an unpaid check, what am I going to debit? I'm going to debit my debtors. I have to reinstate my debtors account with the full amount of the outstanding debt of 500 Rand. The amount that they've paid me, which I'm going to take out of my bank, is going to be the 450 Rand. Now, what about the remaining 50 Rand? It was a discount that I've granted, so I've decreased my sales with that discount. So now I have to reinstate my sales with 50 Rand. So in my debtors, I'm going to debit my debtors account with 500 Rand. There it is. I'm going to credit my bank with 450 Rand. And I'm going to credit my sales with another 50 Rand. So that is a plus 50 because it's a credit against sales. So that's a credit entry, that's a credit entry, and that is a debit entry. So my entry is in balance. D. Ramperstat owes 140 Rand. Write off the account as irrecoverable and adjust the allowance for credit losses to 4% of gross debtors. So the first thing that I have to do is to write off the account minus 140 Rand, and under credit losses, I'm going to increase my credit losses with 140 Rand. So debtors minus 140. Now we can recalculate what is our debtors control balance. It is the 18,640 plus the 500 less the 140, and then that will give us then a total balance of 19,000 Rand. So the updated balance on my debtors account would have been 19,000 Rand. I want my allowance for credit losses to be 4%. So 19,000 times 4% gives me a total of 760 Rand. I'm going to check whether I have an existing balance in allowance for credit losses. So here we have allowance of credit losses, 795. What do we want that balance to be? We want that balance to be at the end of the day, 760 Rand. Oh dear, 760 Rand. So what is going to be? That one needs to be 760. So obviously for that balance to become 760, remember it's got a credit balance there, 795. I want the 795 to reduce to 760 Rand. So I need a debit on my allowance account of 35 Rand. Where is going to be the credit entry then? In my income statement, I'm going to have here adjustment for credit losses, 35 Rand, and that is going to be a credit or income account. That it's going to be part of other operating income in my income statement. Right. Number 7, an employee was on leave and his salary was submitted from the salaries journal for February. No check was issued to him. His details are as follows. Gross salary 67,200 per annum. So I'm only missed 1 month's salary. So if I divide that by 12, it gives me a monthly salary of 5,600 Rand. Now, things like pay-as-you-earn deductions, pension fund deductions, that is deductions that's being made from his salary. If I was required to do the creditor's side of this financial statements, I would have taken that into consideration. But at this point of time, I'm really not interested in that because they only ask me the income statement. So for that 5,600 Rand, I have to add the gross salary to my salaries. Yeah. Plus 5,600. Then furthermore, they've told us that Greef Traders contributes R1.50 to the pension fund for every R1 contributed by the employee. Now they contribute then per month R420. So multiplied, by 1.5 will give me then the amount that they are going to contribute to the pension fund. And that amount is going to be R630. So that's the amount that they're going to contribute. So in my expense accounts, the employer contribution to the pension fund, I'm going to add that plus R630. If I had to do the creditor side, then obviously that would have increased my creditors for pension fund at the end of the year. Rent was received from a tenant for the period 1 March 2011 to 31 March 2012. So guys, obviously for a period of 13 months. Take into account that the rent was increased by 10% on 1 September. So when did our new financial year started? It started on the 1st of March. So the 1st of March up to the 1st of September equals 6 months. I have received 13 months in total. So that means that 7 months I didn't receive X, I received 1.1X. So if I have to plot this now in an equation, I said, well, my total rent received, my total rent income was 19,865. So 19,865 equals then 6 months of rent, which was X, plus 7 months of rent, which was 1.1X. And then if I work out X, then X equals 1450. I have received 1 month's rent in advance. So 1 month I have received the updated, the escalated rent in advance. So 1450 times 1.1 is the amount which I have received in advance, which equals 1595. So again, accrued income, which would have been part of trade and other receivables, would have been debited with 1595. That is the statement of financial position. I'm really only interested in the income statement at this point of time. So rent income there, I would have increased then, or I take it out. I have to take it out at 1595 because 1595 included in that amount was in a connection with the next financial period. So therefore I have to reduce my rent income with the amount received in advance of 1595. Good, 6,000 Rand, no, first number 9. The fixed deposit was invested on 1 July 2011. So on 1 July 2011, make provision for any interest that we still owe at that point of time. Now, if you go back to our fixed deposit, there was our fixed deposit was with BNS Bank at 12% per annum, and the amount that we've invested was 4,000 Rand. So if we're going to do our little calculations here, we would say that, well, 4,000 Rand times 12% times the period that I have invested that fixed deposit was 9 months. So that means I am entitled on an amount of 360 Rand worth of rent income on the deposit. If I go to my trial balance, you will see that I have here interest on fixed deposit of 240 Rand. So therefore, I've already recognized 240 Rand of that specific rent of that interest income that I was actually entitled on. So that means 240 Rand is already there. So the adjustment entry would have been 120 Rand. So interest receivable or accrued interest, which would have formed part of trade and other receivables, would have been debited with 120 Rand, and our interest received on our fixed deposit would have been credited with 120 Rand. The next one, 6,000 Rand of the loan was repaid on 31 December 2011. Make provision for any interest that we own. Now at year end, our outstanding loan amount was there, 24,000 Rand at 16% per annum. That was after the balance was after I've made that amount which I've repaid of 6,000 Rand for the year. So if we're going to work out our total interest that we should have had in our income statement, we would have said that, well, 30,000, which was the original outstanding loan amount, had to be multiplied by the interest rate of 16%, and that amount was outstanding for a period of 10 months for the year. So for that 10 months, our interest payment would have been 4,000 Rand. For the remaining 2 months of the year, our outstanding balance was 24,000, also multiplied by 16%, multiplied then by the remaining 2 months of the year. And that gives us a total then of 640 Rand. So in total, we should have had 4,000 plus 640, 4640 worth of interest in our books. Now let's go and check how much do we have. We have interest on the loan of 4,000 Rand. So obviously what we need here is to post the other 640 Rand. So we would have debited interest, 640 Rand, and we would have credited accrued interest, which forms part of trade and other payables, of 640 Rand. I'm not interested in the second part, but I'm very much interested in the first part. Number 11, insurance includes an annual premium of 2,976 paid on 1 July 2011. So the first thing that we're going to work out is what does it equate to. So 2,976 divided by 12 equals an amount that we actually have to pay of 200 per month of 248 Rand per month. How many months was prepaid? I've paid it on the 1st of July. So the number of months that was actually prepaid equals 4 months. So 4 times 248 give us amount prepaid, and that is a total of 992 Rand. Prepaid expenses would have been debited, which is part of trade and other receivables, and our insurance we will decrease with that amount of prepayment. So there minus 992. Good. The bookkeeper has already written off depreciation on vehicles and equipment. However, she wrote off depreciation on vehicles at 25% per annum on the cost price instead of 25% per annum on the carrying value. In other words, the policy is to use the diminishing balance method, and what she did is she applied the straight line method. Correct the error. No new vehicles were bought during the year. So let's first see what should the depreciation charge have been and what it is. So she said she wrote off depreciation on 25% of the cost price. 180,000 is the cost price multiplied by 25%. And that gives us a total then of 45,000 Rand. That is what she did write off. She should have written off on the diminishing balance method. Now remember that 45,000 is already included now in my accumulated depreciation of 125,000. So obviously I have to take the 45,000 Rand out of the 125,000. Now if I do so, I will then derive at the balance of my accumulated depreciation account as at the beginning of the year, because there was no new movements, no acquisitions, no disposals. So at the beginning of the current financial year, my accumulated depreciation was clearly 80,000 Rand. So if I did write off depreciation correctly, it would have been 180,000 the cost price of the vehicles, less the accumulated depreciation in the beginning of the year, which was 80,000. So we should have said 180,000 less, less 80,000 multiplied cost less accumulated depreciation in the beginning of the year multiplied by 25% to derive at our actual depreciation charge for the year, which then works out at 25,000 Rand. Good. So, in our income statement, we have depreciation and we have a total of 52,200. So let's take out the wrong depreciation first, which was the 45,000 Rand. And then let's add to it the correct depreciation of 25,000 Rand. And then we will have the correct depreciation charge in our books. The last one here is accrued expenses for the year. They tell us the following statements were received in the first week of March: telephone 19550 and water and electricity 4660. So I would have debited the expense accounts and credited accrued expenses, which will form part of trade and other payables. That portion I'm not interested in, but in this I am definitely interested in. So if I rectify my telephone account, I'm going to add a total amount of 1950. And if I'm going to rectify my water and electricity account, I'm going to debit that account with 4660. And then I'm done with the question. All you do now is to calculate your final figures as per your income statement. So let's have a look at that. Greef Traders, statement of profit or loss and other comprehensive income. Don't put it like that. Put Greef Traders, please guys, in a separate line item so that you do it correctly as from the beginning. So there you would have said Greef Traders, and then statement of profit or loss and other comprehensive income for the year ended 29 February 2012. Good. Here you would have said under the Rand column, Rand 2012. Sales, 611760 minus 2340 plus 50. Going back here, 611760 plus 50 minus 2340. Cost of sales, opening inventory 25410, that was as given to you. Purchases 312920 less 375 less 280 less 5246 less 750. There's 312920 less that, less that, less that, less that. And there's the whole katoot that gives you the final balance there of 306,269. Freight on purchases 2615, and then closing inventory like they've given it to you 22,986. Give you total cost of sales 311,308 and a gross profit of 298,162. Other operating income, our rent income now for the year is going to be our that is 19,865 less the 1595, which is 18,270, sorry, and then donations received, that was also in our trial balance of 860. Now you'll see the way that this memo works is that adjustment entry for credit losses the allowance for credit losses, was deducted in this question from my credit losses. There's the 35 Rand. However, if you have put it under other operating income, adjustment for credit losses, 35 Rand, 100% correct. Good. Now repairs, there was no adjustment entries against that. Stationery, if you will go back to your little trial balance here, stationery, we had to add 375 Rand and we have deducted 810 Rand. The donation that we've made, 280 Rand, that is the one that we've added there at the bottom of the page. Packaging material, we've deducted the closing inventory from the packaging material, so the closing balance 5114. Credit losses, we go to the credit losses account. Credit losses was the 1320 plus the 140, and now what they've done is that 35 Rand they have accounted for minus 35 Rand. Good. Salaries, the amount that I gave you, plus the 5,600 Rand adjustment entry, which we have passed. Where is the salaries? There it is, 5,600. Pension fund contributions, the additional 630 Rand that we've added. Insurance, 4956, which is the 5948, minus the 992 Rand, which gives us a final figure. And then depreciation, we have taken out the wrong one, we've added the correct one. So that gives us 20,000 Rand adjustment, and that gives us a net figure of 32,200. Good. Telephone, we've added the last invoice. Water and electricity, we've added the last invoice. Profit before finance charges, 114,852. Then we have received interest on our bank account of 173. We've added in somewhere along the line. Interest here, 173. And then on the fixed deposit, it was the 240 plus the 120, which gives us a 360. Our finance charges, so interest paid for the year, that we've also adjusted. That was the interest on the loan, and there was our total there, 4640. And that then gives us a profit for the year of 110,745. Thanks.